Hello everybody, this is the San Diego real estate market update for October 2020, and I'm not in a casino. I am at home reporting to you, and the headline for this market update is roll the dice, betting on housing, or will our luck run out soon? My name is Lenska. I'm a real estate broker and also investor. I want to help my clients and investors and home sellers and buyers with their bottom line. Do I have reason to believe that there are changes in 2021? Yes. But before we go there, let's look at the real estate data points like sales and inventory numbers, interest rates, employment data, the HPSI index by Fannie Mae, home builder sentiment, evictions and elections, foreclosures and forbearance. For September, we have a median home price up 15.7% year over year. Please don't forget, we're in the middle of a pandemic, okay? So the median home price for detached is up 17% at $753,000. Also, the median home price for attached is up 17.1%, and we're looking at $491,000 for attached. And days on market, 22 days. Last year, a home sold in about 31 days. So you can see that this is a very hot market. We're also going to look at the pending and solds. Here are the pending sales for September. September compared to 2018 and 2019, we are actually up into 2020. But remember, this is not a normal year. So for attached units, we're also up. We're actually up 22%. So whatever you hear in the news about condos are not selling, this is also wrong. And so don't believe always the media. I like to stick to numbers, and especially the numbers I pull myself. So condo sales are going strong right now, or attached, which also are townhomes. So which also tells us that we're probably pushing the affordability right now. Now, if we're looking year to date in 2019, year to date. So what we lost in May and June, we made up so far that the year to date looks just like 2018 and 2019. Now, the inventory levels are very low. So we're down 53% from 2019. Currently, we have about 2,116 homes for sale, which is probably comes down to 1,700, maybe with really sellable and desirable. And same with condos, we're actually only down 28.3% inventory, but we only have 1,593 units for sale. So low inventory prices, low inventory obviously pushes up the prices. So when we're looking over in year to date in closed sales, and we're looking year to date, we're actually below what we were in 2019 because we had less inventory. Makes sense, right? So for September, we're kind of laying right there as an average in detached and an attached. But when we're also looking in attached, actually the attached inventory did a little bit better. So when we're looking at the changes, you guys can see in April we had a little bit of a slowdown because March we had COVID starting. So which resulted in very few closed sales in May, but then we ramped it up again. And since we know houses sold within 22 days, so it really only takes 30 days to close. So in June and July, we saw a big improvement in attached and detached. Will this continue? is the question. So right now on the right hand side, that October 16 to October 22, so that is just as of yesterday, the median home price still hovered at around 650. So it really hasn't moved much, sometimes from week to week. So I consider it that right now the median home price is stalling. What does it mean for investors? You might not be saved by the market appreciation any longer if you do a fix and flip. Now, home buyers are being saved by the interest rate. So really, home prices didn't go up. Only the purchase power of the dollar is only manipulated by the interest rate. So when we look back in August 2018, a house of $575,000 at an interest rate of 4.5% had monthly payment about $3,260, and if we go VA, about $3,000. Now, looking at August 2019, the price didn't go up much, and the interest rate decreased. So suddenly the FHA payment was about $3,000, which is a $200 lower than it was in August 2018. Looking at the VA payment, down from $2,980 to $2,000, that's a $250 difference. Now fast forward to August, where rates dropped to about 2.75, and actually the VA right now is even lower than that. So if you do have a VA certification, go out and buy a house. So the price went up to $650, as we noticed, but what does it mean for the payment? The payment is still the same than it was about in August 2019. And I can go on with examples. Same with conventional, where you put 20 or 25% down. So when you look at 2018, let's pick the conventional 20% down. The payment was $2,330, which was in $2,122 in August 2020. So besides the hoarding mentality of food, toilet paper, housing also comes to that consumer behavior in a crisis. This is a number you should pay attention to. Currently, we have the average percent of original list price received at about 99.8% for detached and 99.4% for attached. So we're still receiving very close to list price offers and closings. Let's take a look at the employment data. Going back to the initial claims, were still hovering around the 800, let's call it the under a million per week, which is pretty bad. The government tells us right now the unemployment rate is at 8%, which is a totally political number, and it really is location, location, location. There's still 63 million and counting that were filing at some point. And besides the service industry, now we're seeing that some of the white-collar workers are also hit with unemployment. So do we see a second wave of layoffs once the payroll protection plan runs out? We have seen it with Disneyland, 28,000. We've seen it with Delta laying people. The flight attendants, they're 50% furloughed and have no health insurance. So they don't show up in any of the numbers. Okay, so we really don't have a good gauge on what's going on with unemployment. So more layoffs are to come. And again, people forget to count the self-employed workers that were able to file under the Pandemic Unemployment Assistance Program. So if you add to the 870, which just yesterday the numbers came out and we were again in the $800,000 range, add the 460,000 that filed for PUA, we come up with a total of 1.33 million. And on top of it, 25 million people as of September 19th are on various government programs. Just to visualize what the unemployment rate is in San Diego, it was 16.6% in August per Applied Geographic Solutions. Now this looks a little bit better. We're at 14.4%, still much too high. So as you guys can see by the color grade, California is not doing too well. Initial claims are still in the $200,000 range, 200,000 range. There are also fewer job opportunities. They're down about 33%. Let's check out what the Home Purchase Sentiment Index is telling us for September. So let's take a quick look at the home builders. They're obviously on cloud 9. That's the highest it has ever been, 83 in the US and 87 in the West. And don't forget, the share of new home sales are at a historic high of 12%, again due to lack of existing homes for sale. Let's take a look at evictions, foreclosures, forbearance, and elections. And here is a graph that I be derailed. So currently we have only 79.4% renters paying made rent payments. If this included even renters where the renters and the landlords negotiated unpaid rent obligations, nearly 28% had payment plans or were even in process of renegotiating things. So that's a pretty bleak picture. So evictions concern mount, but many landlords and renters are reaching new agreements. It is always pretty expensive to have an eviction done, or also for landlords, obviously, if they have turnover. So a few more landlords are willing to renegotiate even the current market rents. But looking at the lender sales, the REO sales, they're obviously still down 30%, which only is a 7% share of all of our inventory, and which we only have 227 lender properties for sale in San Diego County in September. But where are they? Believe it or not, there are 38 in San Diego downtown, 21 in Carlsbad, 18 in La Jolla, 13 in the Hillcrest Mission Hills area, and 9 in Pacific Beach, and tied with Coronado. But if you're looking at the highest share, it's more in the easterly cities: Boulevard, Descanso, Paradise Hills, Mira Mesa, Carlsbad, Lemon Grove, and Imperial Beach. Taking a look at the active forbearance plans, we have 6.3% of mortgages, which is about 3.2 million loans, are in forbearances. So the first wave of active forbearances expired, and only 75% are in an extension. FHA and V loans in forbearances also fell. That's kind of good news. But 363 of those that used to be in forbearance actually sold the property. And that is always a total option, because remember, they are sitting on a lot of equity. Even our appreciation was 17%, but overall in the United States, the appreciation was strong. So people are sitting on positive equity, not like it was in 2007 and 8. So The Mortgage Banker Association says they're only worried about 54,000 loans so far that present significant risk, which is 9% of loans in forbearance have less than the 10% equity where it could become a short sale. And 400 of the delinquent borrowers who could actually apply for forbearance. So the whole communication and to get the word out that this plan actually exists, the lenders are not doing a very good job. But wait, remember it was supposed to expire in October too. That's why we see probably the numbers going down. But just as of 2 days ago, we keep on extending extend, lend, and pretend, because the Department of Housing and Urban Development announced Tuesday an extension allowing single-family homeowners with FHA-insured mortgages to request an initial forbearance through December 31st. Remember, the CDC's eviction moratorium goes on to December 31st. Not the California one. California goes to January 31st. Don't forget that. But which would mean that, remember, they can apply for up to 12 months. So we might not see the effects of the housing market until the end of 2021. So we're pushing real price discovery and what the economy would do without all the government stimulus and plans until the end of next year. To watch is the delinquency rate. September, it was above 8%, and that's concerning. And also it's concerning, yes, you can file for an eviction currently, but remember that the courts are practically backlogged. So higher home prices and economic recession dampen the housing affordability, and which means we saw that the price is probably stalling because income has been stalling. And here are the important elections, the propositions 21, 19, and 15. Proposition 21 is rent control regulations and rent increases. All of these measures will directly affect the rental market, landlord, and their renters. Then Prop 19 is about the property tax transfer exemption on inherited homes that are used as principal residences. But the second homes or rental will still be reassessed at market value when transferred. And Prop 15, I think this is where everybody is concerned about. Once we'll start seeing the Prop 13 going away, and they start with the commercial properties, that it might spill over to the residential market. So go out and vote. The takeaway: to watch delinquency rates, to make sure you understand the market, that the coronavirus drives it right now and not the economy. We have super stubborn high unemployment in California and San Diego more than anywhere else. The election will have an effect on real estate. Real estate is local. Home prices are leveling off. And what are the odds for 2021? Anything can happen. We have the chance for a flat market. Depends on if another round of stimulus will happen. We have the odds for a declining market if no stimulus is passed and interest rates will rise. Or will we even have an increase in real estate prices? We might still have a slight uptick, but which will reverse in 2021. Thank you for listening. Hit the like button. If you like what you heard, you want to check out more of my events, you can find me on Meetup or other educational videos on YouTube. Also, check out SDCIA, which is the San Diego Creative Investor Association. for education and networking with like-minded people.